Hello, welcome to Successful Trainings. The other day, I received a phone call, and on the other end, I heard the Dividend Hunter, to which I replied, no, this is Successful Trainings. It turns out the caller was reading our recent review of the Dividend Hunter on our blog. In this video, we are going to scrutinize the many features of the Dividend Review and answer the question, what is the Dividend Hunter? Who is behind the Dividend Hunter? How does it work? And who is this newsletter for? Without any further ado, let us go ahead and dive in. Okay, folks, we here at Successful Trading, we provide review on not just trading, but investing as a global sense. You know, our approach, or at least our philosophy, trading is just an investment over a short period of time, really. So there is no surprise that on our blog, we provide this type of review like the Dividend Hunter. So this one on here, it's first what to know about it. It's a newsletter as many other with a focus in a particular area. This area is with amassing dividends on stock. So they have this program. It's a 36-month plan where, they can boldly promise and making bold promise about collecting income, which comes from the dividend that the stock that you have are paying you monthly. So you see crazy numbers under $4,800 of the like. So is it really possible? So let's go ahead and peel this like an onion here. So what's a Dividend Hunter in this case here? It's a financial newsletter like many. We have reviewed quite a few on here already, right? You've had, let's say, the monthly fools. Which one did we do? Market Beats, Morningstar, all of those. They are in the same archive if you want, and we will give you a specific direct alternative to this one in this review. So, it's a long-term strategy, right? Really, that's what it is, right? You buy stocks that pay dividend, and the whole idea is that actually, let's look at the 5 points on here or 5 or 6 points that they have listed, such that you can get a gist of what the Dividend Hunter is. So, they find healthy, high yield paying dividend company. I mean, high yield, 5-10% and the likes, right? Buy them when the price is low. That's we will talk about that a little bit based on the feedback that we collected for some of the people who use this. And then you collect dividend and use the so-called DRIP method. We are going to tell you what the DRIP method is very shortly. It's an acronym for Dividend Reinvestment Plan. That's what it is. Basically, it's a whole idea that, hey, I have a stock that's paying me dividend on a quarterly basis normally, and then you take the money, the extra money that's coming out of that, and reinvest it in the stock by buying it. So dripping over and over. If there's the stock, the company is doing great and continue paying dividends. So the money from the dividend that you got, let's say in this quarter, next month, you produce it more money because your number of shares is increasing. That's the whole idea there about the so-called DRIP method. As you find more play, add them to your portfolio and grow your current position. The more stock you will have that are paying dividend, the more money that's you're likely to have. And sell when the price get too high or the yield get too low. Okay. Automatically pay your bills for life. Okay. That's in principle the idea. So you will get the gist of what this method is. Who's the person behind this? This gentleman team playing. Hopefully, I'm saying the non properly is the person who has been doing that. We provide some background about what's this investor has been doing. So the whole idea is that he's picking the companies, right? That's up in the newsletter, and the outlook, which again, depending on what the economy is doing, is that over the next 3-5 years, those companies are growing. And they're paying dividends. So that's really the key thing on here. So at the end of the day, we can ask ourselves, okay, well, here's the background on Mr. Tim, right? So it's an investor. He's an investor in the financial industry as anybody else, all right? So the monthly newsletter they're delivered via email. So for 12 months, you get those, and the picks are in. The picks are in, and then they give you a calendar when the dividend are paid for each stock that it's picked under. Obviously, they don't have the same day that they're paying dividend, right? Each date, company typically have a dividend day that's they will say, okay, if you're holding this stock until this given date, those days are known. So you will be paid the next upcoming dividend, and so forth. So you know that as well. So some of the feature here, the Dividend Hunter startup portfolio. This one is just 5 stocks that are picked to get you started, and then you get to buy. This is the buy of the week recommendation, or the weekly recommendation rather. This is a feature that's sent to you on Tuesday. Okay, that's something, a benefit, if you will, that comes with the whole package, right? So for us on here, in terms of being able to assess really what's going on here, let's talk maybe about some of the feedback that we got from people who have been using this. I mean, let's start maybe from the code. Okay. I have to generally concur with criticism of his choices. I invested a pretty significant amount of money of dollar 2 years ago, and above 17 of his recommendation. Many had gone way down before the virus, and this was early in April 2020 for this feedback on here, review, if you will. Many had gone very down and very big basics. So my overall investment portfolio and now value is off 45%. I mean, yeah, in February, March, the whole market went down. So doesn't matter, dividend paying or not, as the stock price goes down because you're holding the stock, right? So the whole idea is that in order for this system to work, the market is relatively stable. So if, let's say, the price it's flat, meaning it is not growing, or the stock is not growing, the dividend is there to somehow justify you holding it for a long time. The one example that I like really here, let's go to this one on here, because to me, let's illustrate the sense of this, and then we're going to go into who is this for. It all sounds good if the markets remain stable, okay? But to get this kind of weekly or monthly paycheck from the dividend, right, streaming into your mailbox, you have to buy shares in the stock. Okay, this is our point. This is the main thing here. So follow along. I saw one example of 2,387 check in 1 month, but what isn't mentioned is the capital risk for buying the stock. Remember our whole thing, if you haven't, why do we trade options and so forth? That's not the conversation today, but I want to put this in perspective. If the stock, for instance, is $40 and you want 1,000 shares, you need to come up with $40,000. Yeah? That is going to be there in order for you to be getting this paycheck of $2,000 a month. Look at that ratio, just a little bit. What you're buying, it's supposed to be the peace of mind per se, right? That, okay, the price of the stocks, those stocks stays relatively stable. You don't have to do anything, set free and forget it. That's the whole idea about long-term investment, right? Well, that is not always the case permanently. So meaning, yeah, this person is saying that you may get a few gray hairs over 12 months from the unexpected lows in the market. Yeah, we know we have a cap of a kangaroo market. So that's really key. So meaning that who is this, the Dividend Hunter for? Well, you need the capital, first of all. You need the capital. So meaning that if you're a beginner investor, you will need the money. If you don't have that money, this could not play out the way that it plays out. So that's the bottom line on here. So this, you can think of this, let's say, oh, by the way, this is here's another number here for those who are looking for the number on there. I think that gentleman, I don't know how he gets to call me. I think because he had my information because we wrote the article, but we provided the Dividend Hunter number on here. What's the price for it? $49 to start up with. Well, you're buying something for $49. Usually in this thing, the price tells you what you're getting. I'm sorry, yeah, but that's the case. And then $49 as an introductory price, and it goes for, let's say, $197. Is it $197 or $199 per year? And then for life, it goes for here we go. So $99 per year and $297 of lifetime for you to be getting this newsletter. So you're paying $49 per month you need the money, a lot of it, depending on some of those stocks, right? We just gave you an example on there. So for us, our pros and cons at the end of the day, well, it's easy to follow. It goes to the point. The stuff is not expensive per se. What's expensive is the amount of money that you need for the stock, meaning you need some substantial capital to buy the stock. Hence, for us, the barrier to entry in trading option is very, very small. So, okay, here are some of the cons. The newsletter doesn't show an overall performance of the stock picks. The service constantly nickel and dime you to upgrade, upsells. Yes. We have seen this on many services. Yeah, we here at Successful Trading, we don't partake in that. We tell you straightforward what you're getting yourself from. No to, if you come in order to get to this, you need to do that. No. That's definitely not something. Some of these newsletters, unfortunately, we have reviewed a few of them on here. That's what they go for. So at this stage, if you have the capital, and how much capital, we gave you an example, several grams, several G's, even then you can use this strategy in your investment to accelerate the growth of your portfolio. Or some people will rather take the risk to go for growth stock. Some companies, that's alternative to the Dividend Hunter, do things like that. A couple of them is Simply Safe Dividend, and the other one is Share Dividend. We provide you the strategies, unique strategies on here, and I think we have a review on this website on one of them as well. Okay, folks, hope you got something out of this, and you have a better understanding what the Dividend Hunter is, or who is it for, and if it fits your interest. Definitely, it's not a product that we market. Is not a successful trading product. We just did a review of that, and we're bringing you this video today to complement that review. Thank you for your time, and we catch you on the next episode. Bye bye.